EVs. So, yeah, if you've probably bought an EV recently, it's probably not the best news to come in. As probably expected, there was obviously a lot of grants and funding for EVs, and the Chancellor's decided that now's the time to announce the plans to increase taxes. So the electric vehicle excise duty will come into effect from 28, which is essentially 3 pence per mile for EVs, electric cars, and 1.5 pence per mile for plug-in hybrids. From what I've read, it sounds like that will be done based on estimates. So you'll decide that I'm doing 10,000 miles per annum, and you'll kind of pay your what is replacing fuel duty throughout the year. And at the end, if you've underpaid, you'll essentially pay more. There should be consultations on that to tell us a bit more detail. The rate per mile will increase in line with CPI. But I suppose it's always got to be considered alongside what the benefit in kind implications are, because most electric cars or plug-in hybrids will be company cars. So the benefit in kind rate on electric cars at the moment is 3% of list price. That's going to go up to 9% by 29-30. So it will have a large increase. But for plug-in hybrids, the rates currently depends on the electric miles. Could be anything from about 4%, I think, up to about 10%. It's going up to 18 and 19% in the latter 2 years. So plug-in hybrids are going to become really, really expensive. The other bit that I suppose is probably a kicker for plug-in hybrids is they're paying 1.5p per mile for all the miles, regardless of if they're done in electric or petrol mode.
Okay.
So they could do 15,000 miles across the year in 90% electric range, let's say. They're still paying the 1.5p a mile on it, and they'll pay fuel duty on the excess. Or conversely, if it's 90% done on fuel, they'll still pay the same 1.5p a mile charge. So I would imagine that by the end of this parliament, plug-in hybrids will be a thing of the past, because they just won't be economical, I don't think, for company cars. Electric cars will still be probably beneficial, because electric cars don't get hit by benefit in kind on the fuel at the moment. So they'll probably be still quite beneficial. But essentially, anybody looking to either move into an electric car or a plug-in hybrid or renewing a lease at some point will probably want to look at what the cost is now and what the cost is over the term of the lease. So if you're locking in for 3 years at the moment, that'll take you up to November 28. So it'll just be the start of the sort of larger increases, let's say. But you definitely want to model how it's going to look over the long term. It may be cheaper on day one, but it may become more and more expensive over the life. And then I suppose the final one on electric cars is, at the moment, companies can claim a first year capital allowance at 100% on the purchase of an EV. So that's not for leasing, it's if they bought one outright. And the same for charge points installed, which may be at the business premises or could be at home. So that was due to expire 31st of March 26 for companies, or 5th of April 26 for unincorporated businesses like partnerships or sole traders, and that's been extended for 12 months. That's been extended quite a few times, so it may be that it's moved again. But essentially, I imagine when the country's got enough infrastructure for electric vehicles, they'll lower the relief on that, and we're quite clearly not there yet.
No, for sure. So obviously significant changes there on the whole. So we're saying the 3p a mile, is it going to be a self declaration then, or how would either me as an individual or Levitate declare that then?
I think it's on the owner,
Yeah.
And I think you set it at the start of the year. So if you were to acquire a brand new EV, you essentially decide how many miles you're going to do in the year, and you that's what you're assessed on. And then at the end, that's when you kind of pay any shortfall.
Okay.
I think at the moment it's not worded very well, and it may be that when you sell a vehicle that there could be a shortfall to a new buyer.
Right, okay.
Which I would hope that they've clarified before this comes into legislation, because you wouldn't want to then buy a vehicle and somebody's only paid for 2,000 miles and actually they've done 12.
Wow.
But in theory, it will be a self-assessed thing at the start, and in theory, changes later on. I would imagine the revenue would monitor it, one, on a self-assessment basis, but probably also monitoring the MOT mileage things.
Yeah.
And I've read something that's mentioned that there might be like sort of annual checkups for new cars, probably to check the mileage.
Makes sense.
How much that's brought into guidance and legislation is yet to be defined, but theoretically that's what they've announced at the moment.
Cool, that makes sense. And then I suppose the only other thought I have on that is like Luke said earlier, the plug-in hybrids, the benefit in kind rate is set on the number of electric miles, and we've because of how the percentages increase, we even before really plug-in hybrids, it's only tax efficient to have one if it does a large number of electric miles. But so with these changes, I would expect that most of them will fall out of it. It'll actually be more tax efficient to get the salary in and
Yeah, I agree.
purchase the car yourself.
I agree. I think a lot of the hybrids as well, because they've got an electric motor and a petrol motor, they're quite expensive because you've essentially got two systems running. So I think there's a new Range Rover that's got the plug-in hybrid, and the list price is probably 130 to 150 roughly. So even if the benefit in kind rate was 10%, it's still a sizable benefit. When it goes up to 18 and 19%, I can't see the numbers actually working out as beneficial.
I've got a couple of questions. I've been
Sure.
very bad on the chat, so sorry about that. So one question from Georgia, it is defined contribution. I think it was just a confirmation that it is the defined contribution pensions falling into the net from 2027, not defined benefit.
Yeah, defined benefit's final salary. If I said the wrong word, that's wrong. It's defined contribution or money purchase.
So thank you, Georgia. So is that a combined 2K figure or employee and employer? So I think we probably clarified
employee.
That after. So thanks for that column. And then Joe Elder, could we rework employment contracts so that the pensions are higher, reducing salaries, so it is a sacrifice but dealt with in the contract?
I don't know at the moment. I imagine there'll be anti-avoidance in that. It may be that if you hire a new employee on a brand new contract, you've probably got that option. If you've got a current employee and you look to change the contract, essentially circumventing the salary sacrifice, I imagine there'll be, logically, I would hope that there'd be something brought in for that. But I suppose that is a logical suggestion for hiring employees that are going to breach this 2,000. It may be that you say, right, we'll opt you out, but we'll pay a higher pension contribution to cater for that. But yeah, let's see what the consultations say.
Good work though. Trying to beat the system already. I like it.